Hello YouTube, my name is Liam Murphy and I'm a crypto lawyer and Solana developer. And I'm the author of the new best-selling book, Crypto Winner, The Rise and Fall of Billion-Dollar Crypto Empires. In this book, I walk through Terraform Labs, 3AC, Voyager, Genesis, Celsius, BlockFi, FTX. I walk through the founders of each of these billion-dollar crypto empires. I walk through the coins that allowed them to grow, the products that allowed them to bring in billions of dollars of crypto assets, the schemes that led to fortunes and caused fortunes to fall. All of these companies had over $1 billion of assets. Yet in 2020, end of 2022 and 2023, all of these companies filed for bankruptcy and would collapse. The SEC, the CFTC, the DOJ, all of them would go after the founders for fraud. And I studied this. As a crypto lawyer in New York City for the last 5 years, I've worked on some of these cases. Worked on Celsius. I've worked on Terraform Labs. And I know exactly what went wrong. And I'm going to share it with you so we can create our billion-dollar crypto empires together. And today is lesson 1 with Terraform Labs. It's the first chapter of my book right here. Y'all are going to have to check out this book. Get it on Amazon right now. So Terraform Labs has a lot of lessons. Do Kwon, I'm sure you all have heard of him, and Daniel Shin teamed up. They both had previous experience. Do Kwon had a previous stablecoin project, Basis Cash, that collapsed. And Daniel Shin had an e-commerce brand, Ticket Monster, and he was able to secure investors early on. These two partnered up to grow one of the biggest crypto revolutions, honestly, in the last bull market. But unfortunately, it collapsed. And I'll tell you why. Algorithmic stablecoins are pretty risky. So the Terraform Labs, for those who aren't familiar, created a massive blockchain that was was used a lot during the time. And it focused on 2 different kinds of cryptocurrencies. The first is UST, which was an algorithmic stablecoin. Now, Do Kwon had experience working on prior stablecoin projects and believed that stablecoins would lead to the mainstream adoption of cryptocurrencies. Because while some cryptocurrencies are volatile and can move 5% up and down on the week, on the day, stablecoin projects are pegged to $1 or pegged to an asset. And what makes an algorithmic stablecoin different from a normal stablecoin is that it's not backed exactly 1-to-1 with that asset. So if you think about it like this, let's say there's 1 billion UST tokens. If they were all going to be backed by $1, then there should be $1 billion in the bank account ready to exchange for UST with their customers. That way it avoids a bank run where there's not enough liquidity to pay off all the people who own the stablecoins. So they did a really revolutionary thing with Terraform Labs to peg it to $1 using an algorithm. If UST traded above $1, that implied that there was an excessive demand of UST, that a lot of people wanted UST. And so what arbitrageurs would do, they would burn their Luna, they would remove Luna from circulation to mint new UST, and when there's more UST tokens, it would decrease the price back down to $1. So if it went to 102, they would burn some Luna, and then it would go back down to UST would go to $1. So Luna was the governance proof of stake token. It allowed people in the Terraform community to vote on protocols, to vote on proposals, to vote on upgrades, to vote on burns. So it was a very important mechanism, very interesting. Luna saw an insane increase over the last bull market. At one time, it was a top 10 cryptocurrency, which is wild. It was worth billions and billions of dollars. I think it reached around $10 billion at one point, maybe even more. And that was really wild. Luna basically acted as a buffer asset to maintain the price of the UST stablecoin. And UST increased so much and was used very widely. And it especially was because of the two protocols that Terraform created, the Anchor protocol and the Mirror protocol. Both of them are very interesting, and both of them will be repeat products that you'll see in the crypto industry, so you're gonna wanna stay tuned for this. So the Anchor protocol was like a high yield savings account. You know, you put some money in the bank, some high yield savings account gives you, what, 1%, 2%. Some products maybe give you a little bit more, but they were promising 19 to 20% a year return. So pretty much if you deposit UST in Anchor protocol, then you get 19 to 20% a year, which is a very, very good return, almost too good to be true. And that's why a lot of people flooded their UST assets to Anchor, get the guaranteed 20%. So this brings up a very important point. When there's a high yield product, I explained this in my last YouTube video, which you should definitely check out. When there is a high yield product, it usually has hidden risks. So if you're getting 20% of your money and allegedly not risking anything, with Anchor protocol, you could even withdraw it immediately. There wasn't even a lock. What you would get is a lot of guarantee in that 20%. I mean, that's pretty wild, but it's a little bit too good to be true, and there's a risk of default, which exactly is what happened. Default is essentially when there's a bank run and the lender or the person who has the money can't redeem all of the money that they've been borrowing. So let's say they have $1 billion of UST, but they can't give it all out immediately in time. So the second protocol was the Mirror protocol. And the Mirror protocol mirrored assets like stocks and securities. And they allowed people to trade these like securities on the Terra blockchain using this complicated formula that pretty much granted you mirror tokens. And so these were two protocols that allowed a lot of use case for the Terraform blockchain and allowed it to grow to billions and billions of dollars worth in value. So when a company gets so big, so powerful, has so much money, has two of the top 10 cryptocurrencies on the market, what do? They fundraise heavily and they create alliances. And they created the Luna Foundation Guard, LFG. If you haven't heard of Luna Foundation Guard, you should definitely research it. I could do a whole video about the Luna Foundation Guard. Essentially, it was top venture capital, it was 3AC, it was Jump, it was Terraform Labs. They all got together and fundraised $1 billion of Bitcoin. And they had their eyes set on $10 billion of Bitcoin. This was in 2022. And they raised this astronomical amount of Bitcoin to do one thing, to defend the UST peg from a bank run. They knew there was risks with this product. They were giving out 20% on the money, and they knew that there were risks. They knew that there was a chance the algorithmic stablecoin could break. And it would break if there was not enough people who wanted UST. So if UST lost demand, then people wouldn't, if it lost demand, then people would withdraw their UST for whatever they could get. They would withdraw it for $1 and then they would sell it immediately, instead of just allowing it to sit in Anchor protocol and become worthless over time. So the whole formula depended on a lot of confidence in UST and Luna, and that this would all be secure. But in fact, it was not. And what happened next was pretty wild. As the bear market started to set in, as people started to worry about the risks with investing their money in the crypto sector, there was a bank run of assets. People raced to withdraw from all of these exchanges, as I tell in my book, which you should totally buy on Amazon. They would race to withdraw their assets, and that's exactly what they did from Anchor protocol. They rushed to withdraw their UST tokens and sell those tokens to exchanges on Binance and different platforms, and to get whatever money they could out of it while they still could. And instead of allowing it to collapse and keeping the billions of dollars of Bitcoin that had been raised at this point, over 80,000 Bitcoin have been raised by the Luna Foundation Guard. Well, guess what they did? They spent all of it. They spent all that Bitcoin trying to defend the peg, trying to reinforce that algorithmic stablecoin, trying to make sure UST did not depeg under $1. But what happened? It depegged. It created a death spiral where Luna and UST both kept being worth less and less, draining them of nearly all value. And just in a couple days, from May 6th to May 11th, 2022, each UST went from $1 to 35 cents, and the Luna Foundation Guard had spent or given all of the Bitcoin that they had fundraised to try to save the peg, which failed. This created a chain reaction that caused crypto winter. And Do Kwon, as the lead man, he was the guy who became one of the most popular guys in crypto in 2021 and 2022. He took off. He ran. He was on an Interpol notice. There were people looking for him. The SEC had already sued Terraform Labs, and they sued them again. The DOJ was coming after them. The Korean government was coming after them. And on March, so basically right after it collapsed in the second half of 2022, South Korean prosecutors went after Do Kwon, looking for him. And he was on the run for a while, and he was eventually arrested in Montenegro, not for any of these big crypto fraud, the big crypto fraud and Terraform collapse, but for having a forged passport. And while he sat in Montenegro serving his time for forgery, both the Korean government and the United States government, criminal prosecutors, both wanted to extradite Do Kwon to their countries in order to prosecute him for the fraud and the harm that he caused the investors. That's the hidden thing behind all of this, behind crypto winter. Over $1 trillion in value was lost. The crypto market plunged from multi-trillion valuation to under $1 trillion. Bitcoin went from $69,000 a Bitcoin to $16,000 a Bitcoin. People lost a lot of money. And that's why Do Kwon was wanted by the DOJ for fraud. That he caused this massive, massive collapse, trying to save the UST stablecoin, inflating the UST stablecoin. And it shows a couple things, a couple lessons. One, don't invest all your money in something that can go to zero. Bitcoin was never going to zero. But when you spend all of that Bitcoin, $3 billion of Bitcoin, trying to save a failed product, it misses the point of all this, which is to make money. And so they lost so much money by doing that. Don't invest anything to go to zero. Another thing, Do Kwon, another lesson. Do Kwon was a master of the narrative. He told everyone that Terraform is the next big thing. It's revolutionizing crypto. But you have to be skeptical. He was very young, and there's a lot of risks associated, and he didn't explain those risks when this got very, very big and could cause a lot of damage. So the story is not finished yet. It's still going. Do Kwon got extradited to the United States and awaits criminal trial. He came in January, right here to New York to await trial. And this 3-year from 2022 to 2025 was full of lawsuits, full of legal actions, full of prosecution. And I explain it all in my new book, Crypto Winner, which you should 100% buy. So we'll see what happens with Do Kwon. He awaits trial for collapsing the whole crypto industry. And we will take these lessons and we'll move forward to create our own billion-dollar crypto empire. So I've created 2 products so far this year, 2 crypto products. Both of them are built the same, but have different purposes. The first is serious. It's called Lawyer, or crypto law currency. And it's on Solana. It's a scarce asset on Solana. There's only 1 million coins ever for both of them. But for Lawyer, it is tied to my law firm. I'm creating my own law firm, Murphy's Law, the crypto law firm. And my hourly rate's pretty expensive, about $1,000 an hour. And so instead of paying that, some of my clients simply can just pay $250 an hour and give that to me. And the reason why they can do that is because when they buy $250 of crypto from the liquidity pool, it increases the value of all tokens, thereby giving me more than $1,000 of value per hour. So this is just one way we're revolutionizing the intersection of law and crypto. Here at Crypto Law, make sure you get involved, make sure you like, make sure you subscribe, get involved. We're on all social platforms. They'll all be linked below. Make sure to check them out. And then second is Wiener Doge, which is my fun project. It's based on my Wiener dog. And it's just for fun. We will be creating an NFT collection next month, which I'm very excited about. It's built the same way, 1 million tokens, scarce asset on Solana. Solana is an amazing network. It creates lightning fast transactions. It has become the internet currency, but it's not scarce. And so both of my products fix that by creating a limited cap, 1 million tokens on the Solana blockchain. And more important than all of that, these tokens in this book are meant to grow a community in America and in the world. America is just now embracing crypto technology. Some countries in the world haven't barely even heard about crypto technology. And to encourage mainstream adoption, we need to learn lessons from the failures of these billion-dollar crypto empires that fell, so we can work to build the next billion-dollar crypto empire in a sustainable, fair, non-fraudulent way that benefits everyone. I hope you stay tuned. This is just the beginning. Thank you so much, family. Until next time, thank you so much.